Welcome to Kitco News. I'm Niels Christensen. We're here at PDAC 2020, the world's largest mining conference. Joining me today is Lisa Davis, CEO of PearTree Securities. Thank you very much for joining us.
Good morning. I'm very glad to be here again.
In our last conversation, we talked about flow-through financing, a very unique Canadian investment tool. But you're now saying that foreign investors should participate in this. How can they?
Well, in the format that PearTree Securities provides to investors, we structure flow-through financing offerings. And the way we do it, just to recap a little bit about last time, is that we have clients who are interested in acquiring flow-through shares for philanthropic purposes. So because of the tax benefits associated with those shares for the Canadian donor investor, they're able to make their charitable gifts at a lower after-tax cost, which means they acquire the securities, the Canadians, they donate those shares to a Canadian charity, but the charity needs immediate liquidity. They're not in the business of holding junior mining stocks. So we have to pre-arrange that liquidity in order for this arrangement to work. And the really elegant thing about this structure is that a flow-through share is simply a common share. The flow-through tax benefits are conferred on the initial Canadian subscriber by way of the subscription agreement. But as soon as they've moved from the hands of the original subscriber, they're a common share which can then be sold on to any global investor, whether they be institutional, strategic, high net worth. There's no restrictions at that point. So it's a way of, as we say, we're expanding the universe of flow-through share capital.
What's the percentage of foreign investors in flow-through funding? Is it high? Is it low?
It's hard to come up with exact statistics for that. Some of it is not as transparent as I'd like it to be, so I don't have an exact answer. I can say that I believe it's increased by virtue of the fact that prior to around 2007, 2008, this wasn't an option that was open to non-Canadian investors. And since the percentage of funds raised on Canadian exchanges to fund exploration is by and large done through flow-through equity financings, at least 2/3, and for the smaller deals as much as 80%. If you can't find a way for foreign investors to participate in these transactions, they're much more limited in their ability to do so.
Mm-hmm. Is there a risk that the Canadian market gets saturated? I mean, 80% of financing for junior miners is through flow-through funding. How important is it to get foreign investors into the markets?
It's very, very important. So when we talk about 80% of the market, it's 80% of a market that's contracted considerably. There are many more issuers that would like to be able to access more capital for exploration and development purposes. Really the sticking point to all of this is having that liquidity for the charity in this structure. So I together with a couple other members of my team at PearTree have been spending time in London and in Europe more over the past year and a half or so, really for the purpose of educating foreign investors who wouldn't otherwise understand how they can participate. And I know that there's an international law firm that has a London office that puts out a report annually on investment by private equity into mining. And they indicated last year that the London-based private equity funds had put a very large percentage of the money they were tracking into Canadian projects. So it's definitely happening.
On that note then, I mean, what do you think is the health of the mining sector? I mean, we've seen higher gold prices, we've seen margins improved. How much capital is coming in?
Well, look, the fact that if you compare where we are today, just in terms of looking at gold prices to a year ago, obviously that's somewhat of a catalyst. But then again, in the very short term, we're seeing incredible volatility. I think the benefits have been realized mainly by the larger producers, where being able to sell a product that they're bringing to market immediately has meant that their margins are improved greatly over a short time. For junior companies, where again they're not cash flowing, they haven't become producers yet, their only source of capital for the most part is equity, and mainly through flow-through share offerings. That hasn't really trickled down as much as we'd like to see it. I think there's been, there's obviously cycles, but I think some of the structural changes to the market for the investment in mineral exploration companies have impacted things in a more permanent way, and we're seeing some improvements, and I think that will continue, but there's a long time lag between when people really wake up to the fact that there are some supply deficits and when money really starts coming back into the sector.
When do you think that happens? Can the sector recover?
I think it has to recover to a certain extent, because it's an old adage, but if it's not grown, it's mined, and there's just we can't maintain the lifestyle that all of us want without continuing to find new sources of supply of minerals. So it will change. I mean, in some ways, I think there have been some positive things with a lot more attention being paid to things like ESG, environmental, social governance. Improvements in governance, for instance, has meant that the companies that are sort of coming out the other end of this are better companies. But I think it's taken a long time for investors to believe that the companies are being better managed, they're being better stewards of their capital, and that's changing.
Mm-hmm. Well, and flow-through funding has helped with the ESG. I mean, it's been a boon for charities in Canada as well.
Yeah, I mean, I think flow-through funding addresses two issues on the ESG front. One is that because of the tax regulations within which flow-through funding offerings are conducted, it's necessary for the funds raised to be used for specific purposes prescribed by the Income Tax Act. And so when I talked about being, proper stewards of your investors' capital, that money by regulation has to basically go into the ground and advance a project. It's not going to, G&A expenses that may be, questionable. And the other thing is that in these structured transactions that we do, we're both able to bring much needed capital to the junior part of the market, but at the same time, all of those shares are being used to facilitate charitable donations. So we are seeing more issuers that are, very pleased to be able to participate in something where the giving back to the community is part of that as well.
Thank you very much for sharing your thoughts on the importance of flow-through funding in the mining sector. I really appreciate your comments.
Thank you, Nils. It was good to be back.
Thank you very much for watching Kitco News. For all of our coverage at PDAC 2020 and for the latest precious metals news, go to our website, kitco.com.